The year is 2025. Everywhere you look, the signs are becoming impossible to ignore. The same patterns, the same reckless confidence, the same mistakes that led to the greatest economic disaster of modern history are playing out all over again. Most people see stock markets climbing and think prosperity, but those who truly understand the world of money see something very different. They see history repeating itself. They see 1929 all over again. When we imagine the Great Depression, we picture breadlines, dust storms, and lost fortunes. But those images are the outcome, not the cause. The real story is what happened before the crash. The Roaring '20s weren't just about jazz and flappers. They were about a financial bubble so massive, so intoxicating, that an entire nation convinced itself the party would never end. Sound familiar? Today, every major warning sign that led to 1929 is flashing red once again. Wealth inequality is at historic levels. Speculation runs rampant. Credit flows more freely than ever. Governments are desperately trying to keep the machine running. This isn't just a warning, it's reality. We're already living it. The only question is whether you will recognize the pattern before it's too late. Imagine America in 1928. The stock market had been climbing for nearly a decade. Everyone, from shoeshine boys to millionaires, was playing the market. Credit was flowing like water. People bought stocks on margin, borrowing against their homes, convinced that prosperity was permanent. Newspapers called it the new economy. Politicians promised that boom and bust cycles were a thing of the past. Technology would change everything forever. Pause for a moment and consider that. Doesn't that sound a lot like today? Because in many ways, it is. The cycle of speculation that gripped America in the 1920s has returned in a new form. Back then, the Federal Reserve kept interest rates artificially low to stimulate growth. Banks lent money to almost anyone. Speculation wasn't just tolerated, it was celebrated. Falling markets seemed impossible. An entire generation had never experienced a true crash. Fast forward to today. We've had more than a decade of near-zero interest rates. Money has been so cheap for so long that entire industries exist solely because of easy credit. Venture capital pours millions into companies that have never generated profits. Cryptocurrency speculation has made the stock market gambling of the 1920s look conservative. And just like then, anyone warning that disaster could come is dismissed as a pessimist who doesn't understand the new paradigm. The wealth gap today is even more extreme than it was in 1929. In the late 1920s, the top 1% controlled roughly 23% of all wealth. Today, that figure exceeds 32%. This matters because when wealth concentrates at the top, consumption at the bottom collapses. The rich can only spend so much. Real economic growth relies on a broad middle class having money to spend. But when that middle class is drowning in debt and struggling to afford basic necessities while assets inflate beyond their reach, the foundation of the economy starts to crack. In 1929, ordinary Americans were leveraged to the hilt. They bought stocks on margin, putting down only a fraction and borrowing the rest. When prices fell, margin calls forced them to sell at exactly the wrong moment, amplifying the crash. Today, we have a different kind of leverage, but it is everywhere. Corporate debt has exploded. Government debt has exploded. Consumer debt has exploded. Student loans, credit cards, mortgages that people can barely manage. The system assumes tomorrow will always be better than today. And just like in the 1920s, the people in charge insist that this time is different. Central bankers talk about soft landings and controlled inflation. Politicians promise that government spending will create prosperity. Tech billionaires claim that their companies are worth more than entire nations because of revolutionary breakthroughs that will change everything. The same arrogance, the same delusion, the same refusal to acknowledge that what goes up must eventually come down. But there is something even more dangerous about our situation today. In 1929, most Americans still lived on farms or in small towns. They had skills. They could grow food, fix things, survive without complex systems. Today, we are utterly dependent on supply chains, digital payments, and institutions that exist only because of confidence and credit. When that confidence breaks, the collapse will not just be financial, it will be civilizational. The smart money already knows this. Billionaires are buying farmland and building bunkers. Central banks are quietly accumulating gold while telling everyone else it is a relic of the past. Insider trading in Congress has reached record levels. People with access to real information are positioning themselves for what is coming. Meanwhile, the general public is being fed the same lies that soothed Americans in 1928. Everything is fine. The economy is strong. Technology will save us. The government has tools to prevent another depression. Trust the experts. Don't panic. But here is what the experts won't tell you. The tools they used to fight the last crisis, money printing, bailouts, zero interest rates, didn't solve the underlying problems. They postponed them and made them worse. Now we are facing a reckoning that will make 1929 look like a practice round. The patterns are unmistakable. The timeline is accelerating. The people who should be preparing us are either clueless or complicit. History doesn't repeat exactly, but it rhymes, and the rhythm is growing louder. The crash of 1929 did not happen overnight. It was preceded by months of warning signs, ignored or rationalized away. Stock prices had become completely disconnected from the value of the companies they represented. Radio companies were trading at hundreds of times earnings. People convinced themselves that traditional valuation metrics didn't apply to revolutionary new technologies. Sound familiar? Today, we have companies worth hundreds of billions, with little or no profit. Electric vehicle startups, AI companies, cryptocurrency projects with valuations that defy reason. Justifications remain the same. This time is different. We're in a new era, the old rules don't apply. But gravity always wins. In 1929, when reality finally reasserted itself, the fall was swift and merciless. Between September and November, the Dow Jones lost nearly half its value. Fortunes built over decades vanished in weeks. Banks that seemed unshakable collapsed. Confidence that had fueled the system evaporated. Today, the vulnerabilities are even more extreme. In 1929, speculation was mostly in stocks. Today, bubbles exist everywhere. Real estate prices defy logic. Bond markets are propped up artificially. Cryptocurrencies swing by trillions on a single tweet. Private equity valuations rely on cheap money and forgotten risk. Interconnectedness makes it worse. In 1929, bank failures were isolated. Today, the global financial system is woven together so tightly that a crisis anywhere can become a crisis everywhere in hours. Algorithmic trading amplifies it further. When the selling begins, it will not be slow. It will be instantaneous and brutal. Unlike 1929, we do not start from a strong foundation. The response to the last crisis loaded the system with debt and moral hazards. The next crash will expose the insolvency of institutions and governments that have been living beyond their means for over a decade. Beneath the surface, cracks are widening. Commercial real estate is quietly collapsing. Regional banks sit on hundreds of billions in underwater assets they cannot disclose without triggering panic. Pension funds are making desperate bets to meet obligations they know they cannot fulfill. Media and politicians mask the damage with optimism and creative accounting. Trust in institutions is at historic lows. When the next crisis hits, it will not just be economic, it will be a legitimacy crisis that could tear the social fabric apart. Yet the response from those in power remains the same. Denial, deflection, doubling down on policies that created the problem. Central bankers speak in riddles about transitory inflation and soft landings. Politicians promise more spending and regulation will create prosperity. Executives buy back stock while their companies lose money. The delusion is total. History teaches that reality has a way of breaking through, even the most elaborate fantasies. In 1929, the reckoning came suddenly without warning to those who convinced themselves it could never happen. The same willful blindness exists today, amplified by social media echo chambers and a financial press profiting from optimism. The smart money is not just preparing for a correction, they are positioning for a complete reset. They understand that when this bubble bursts, it will take down currencies, governments, and the entire post-war economic order. The only unknown is timing, but patterns are clear. Euphoric markets, ignored warnings, the "this time is different" mindset, borrowed money chasing inflated assets. Every box is checked. The stage is set. The actors are in place. Most people will be blindsided when the curtain falls. History may not repeat, but if ignored, it will crush you all the same. The parallels between 2025 and 1929 are not coincidences. They are warnings written in debt, markets, and human behavior. The same arrogance that convinced Americans in 1928 that prosperity was permanent is alive today, dressed in technology and modern jargon. The crash is coming. The only questions are when, how severe, and which side you will be on. Those who understand history can prepare. Those who do not will learn its lessons the hard way. The echoes are getting louder. Are you listening?